All right, with Dr. Wangi's reforms, the article that I've uploaded and I've gone through the class, he basically says that this monetary policy cannot work. There's some fiscal policy, but it may consider, the government may consider addressing inflation. But what will happen is that when the government considers it, it will come at a cost to the government. So why is Dr. Wangi saying that it will come to a cost at the government? So when he's making this statement, he is basically saying that it will come at a cost to the government because of the fact that the government will have to cut back on its revenue, right? So there's some things that he suggested is that the revenue that the government is making in terms of taxation, what happens is that if it lowers taxes, it will make a loss in revenue it's collecting. So it says the government can use fiscal policy to intervene in the market, but it will come at a cost to the government. All right, what are the suggestions that Dr. Wangi has proposed? All right, the first suggestion is proposing is provide tax relief measures on imports, all right? So most of the imports that are subject to custom fees and charges at the entry point, when they're brought in, the government can reduce or remove import tariffs and duties on selected consumable items like fuel products, and it will ease price pressure faced by households and businesses. This is basically because of the fact that when the costs are being passed to the consumers, so when the government sort of helps the company by subsidizing cost and decreasing its cost, it will also decrease the price as well. But Dr. Wangi is saying that it will come at the cost of the government because of the fact that it will be a reduction in the government's import cost as well. All right, the second suggestion he makes is that he says reduce goods and service tax, GST. So GST is the 10% consumption tax that's placed at the point of sale of goods and services. And what the government is saying is that, Thomas Wangi is saying this, the government can help combat inflation by decreasing GST, so reduction on GST. As a result, if the government does that, you would note that it will definitely face a loss in its revenue. All right, now it goes on to say you have to reintroduce fuel subsidy because of the fact that most of the gas and the fuel sort of components come from the part of the region where we have the Ukraine and Russia war. What the government can do is the government can provide fuel subsidy for its citizens. So given the current high fuel prices, the government may consider introducing fuel subsidy. And basically a fuel subsidy is a form of financial support provided to individuals, especially vehicle owners and firms, all right, by the government through the budgetary process. This implies that the government is taking a portion of the price to ease spending pressure on consumers and business. So instance, like if 1 liter is 10 kina, the government will provide a subsidy of 3 kina. So the government pays 3 kina and you pay 7 kina. As a result, the government is subsidizing your fuel sort of costs. But the problem is that if the government is decreasing its GST, if the government is decreasing its import tax, that means that it's decreasing in revenue. And now when the government is trying to subsidize your fuel subsidy, that means the government has to take money out from its budget appropriation and then provide that subsidy. As a result, the government is not only cutting back on its revenue collection, but it has to pay for an expense, which is your fuel subsidy. All right, and the fourth one that you see there is the decrease or lowering of personal income taxes, all right? So what happens is that if the government reduces personal income tax rates, basically it will try and be an aid to combating these inflationary pressures, but they can support suggest ways in supporting wages and salary earners. And basically what they do is trying to, if they reduce the rates of personal income tax, that means that the government can, in its efforts and in its sort of policies, basically increase the take-home pay for a worker, a professional taxpayer in this country. So, for instance, if the tax was 500 kina for a person that earns 2,000 kina total salary, but he pays 500 kina tax and 1,500 kina take-home pay, what they can do is they can try and say that, okay, we'll cut the income tax and we'll add 250 kina more to the person's salary. So in case of a person in this example is taking home a 1,500, after this cut, he will take home 1,750. So that is in essence, the government sort of working around to support its citizens.